welcome to Taking Stock. This is the show where we take stock of the week gone by and prepare you for the next trading week. And what a week it was for the stock markets. The bulls were back in the driver's seat this week, and we saw the Nifty and the Sensex post the biggest weekly gains in absolute terms since May 2009. So that was a big refresher compared to what we've seen for the last many weeks. Anuj, a great week for the bulls, lots of buying action. But the million-dollar question is, was this just a pullback rally that doesn't have too many legs, or was there some genuine buying that we've seen?
Sonia, a combination of both. But I think even in the delivery-based buying, my only worry is, was this hot ETF money, which again can get pulled out. So you've got to keep one eye on the global markets. If global markets start to sell off again, then I think our markets will follow. There's absolutely no doubt about that. Some part of our rally this week was also correction to the underperformance heading into the budget. You know, the rally started on the budget day. The first 2 days was clearly just correcting that underperformance, and after that we moved in line with Asia, moved in line with global cues. So in that, I'll be watching out for global cues. Bear market rallies are powerful, so if this is one of those bear market rallies, it would fizzle out soon. If that's not the case, then I think it would suck in a lot of people, because now a lot of people would feel that they've missed out, so they would want to buy. So over the next 2 or 3 weeks, I think we'll get some answers.
Oh yes, we will. And typically, as is the case with the first phase of the pullback rally, we saw a lot of beaten down names rally this week. So the PSU Bank Index was up 20% for the week, and the metal index was up about 12.5% or so. So plenty of high beta trades. But is this sustainable? We have two gentlemen on the show joining us in the first segment, and then later on we have a couple of more guests. But first up, we have Jyotivardhan Jaipuria, founder and MD of Veda Investment Managers, and Ashwini Gujral on the technicals to tell us how we should approach the weeks to come. Gentlemen, thank you for joining us on Taking Stock. Jyoti, I want to start off with you. This rally of almost 6% this week came as a bolt from the blue to anyone and everyone on the Lal Street. What do you think was the genesis of this rally, and do you think it's sustainable?
Yeah, so Sonia, like Anuj was saying, India, had underperformed a lot in the run-up to the budget. There was this whole fear about capital gains tax. So once that didn't come, the budget seemed like a relief that, even if it didn't do anything dramatically positive, it didn't do anything negative. So if we look at India in the last 1 month and compare it with other global markets, India has still been like an underperformer. Most markets have actually performed better than India in spite of the rally which we saw in the last 1 month, because India has been more or less flattish over the month. So it was just, India fell much more than most global markets, and so it gave this bounce rally which came through.
Okay, Jyoti, so then the follow-up then is this rally sustainable, or do you think this is again one of those pullbacks which we have seen in the global markets in the past as well, which gets sold into and we seek lower levels?
Yeah, so I think, we've had the rally, so we've had a jump from the lows, we've had close to a 10% jump. The next 2 weeks are going to be, the weeks of central bank, because, you have the ECB meeting on the 10th, and then you have the Fed meeting on the 15th, and that somewhere will decide where global markets go and where India goes. So I think, India's back to now global cues from now on, till the Reserve Bank actually acts. So I think the next few weeks are going to be more like India performing in line with what the global markets do. And I think the global markets are going to be determined by what the two central banks do.
Okay, but I'm sure you do a lot of ground level checks on earnings recovery, sentiment indicators, etc. Fundamentally, do you think anything has improved for this rally to be warranted, or do we still have to wait some more time before seeing any sustainable pickup in earnings?
So, if you look at the economy, my view is that we are bottoming, and we'll probably see a very slow recovery happening, which will be more visible towards the end of the year. This will be led mainly by consumption. So, you have urban consumption, which probably has been picking up slightly. The rural consumption was disappointing last 2 years, so in some sense it dragged down what was an urban consumption recovery. Hopefully we get a good monsoon, which by law of probability should be a good one, and so we probably see by the end of this year both urban and rural consumption doing well, and that probably will lead to a bit of recovery in the economy, and I think that leads to some earnings recovery.
Okay, that's some fundamental thought, but let's get technicals also in this discussion. Ashwini, you did say that this could be the trend week. Do you think the market could go through a process where there's still a lot of skepticism, a lot of people miss out calling it a circus rally while the market keeps moving up?
Well, chances are that next week we'll see some amount of consolidation. But obviously everybody wants the market to come down to 7150, which it won't. But I think the next week cannot be the kind of trend we've just seen. 85-90% the bottom has been made. Now once we consolidate a bit and again move forward, I think that will get confirmed. But I believe that looking at several different stocks and sectors, it appears that 6800 may not get revisited again. Now obviously we can consolidate for the next 1 week, 2 weeks, but overall the trend is up and the market is unlikely to give great opportunities to enter. Maybe 100 point, 50 point here and there corrections you'll get, but overall just the under ownership will not let the market correct beyond a point.
Okay, so 90% the bottom has been made. That's the word coming in from the technical expert. But Ashwini, that's about the bottom. What about the top? Because give and take everything, all this market has done is just reverse its losses that it saw in the month of February. I mean, at the start of February, we were at that 7,500 mark. So do you get a sense that the upside for this market is also capped at around this 75, 7,600 in the near term? Or could we take that out in the next couple of weeks?
Well, obviously from 6,800 you won't go straight to 9,000. There will be backing and filling, but the process of rebuilding has started, which means we were coming down the stairs. Now at least we will go up the stairs a bit. I believe by end of the year, if some amount of good news starts to happen, 8,200 is not so unlikely. But from 7,550, 7,600 thereabouts, you will have some consolidation, some correction. Maybe a fresh rally resumes from about 7,350, 7,400, and then we go back towards 7,950 type of zones. All that is possible, and that will take its own time. But I believe that incremental downside that we were seeing, lower bottoms and lower highs, that has been turned to higher bottoms and higher highs.
Okay, Jyoti, the other key factor this week was that we had the return of FII inflows. Would it be too early to celebrate that? Or do you think we can say with fair degree of certainty that the worst of outflows at least could be behind us?
Okay, so it's probably a little too early to celebrate because what we saw was like there's been a lot of fund flow out of emerging markets, and India was just part of it because India is, just remember, the most overweight country still for emerging market funds. So I think if we get a renewal again of emerging market money flowing out, then we'll probably get this FI flow again coming to haunt us that okay, emerging markets are seeing outflows and India is seeing outflows. What we have not done, and that is something which has been missing, is India just standing out on its own, that even if you're getting emerging market outflows, our earnings are so strong, our economy is so strong that you can't sell India. That phase we have not yet seen in India. So I think we are still very vulnerable to what overall emerging market outflows are.
Okay. Well, at the end of the day, it's all about stocks and money making, right? So let's ask Ashwini what's on his radar. Ashwini, we had some big moves in the PSU banks and in the metal names last week. If you had to pinpoint about 3 or 4 stocks that one can buy into next week, what would your list look like?
Since this is a weekly show, I have looked at some monthly charts. So what we have to do next week, probably I'll be able to talk about Tuesday morning. Let's look at since we are talking about bottoms, what the longer term person could buy in terms of mean reversion. Now basically what I did was that I looked at the monthly chart and I drew a 20-month moving average. Now a lot of stocks have not vitiated their monthly trends. So something like a UPL, in spite of correcting from 570, it's still holding on to that average. So that's something longer term people could buy and look for a retest of 550, 570 given agriculture focus, etc. That could work out well. Similarly with SRF, again you've seen a correction towards its 20-month moving average. Out there you could easily see targets of about 1450. Similarly, the banks, SBI, ICICI, what's happened here is that they have moved below the 20-month moving average by quite a margin. I mean, SBI, it's been for the last 3 odd months below that average. So 140, 150 is a strong support. Even just getting back to the average, which is what mean reversion is, you should expect 240, 250 on SBI. Similarly, ICICI 20-month moving average is closer to 290. So, significant moves can happen just by virtue of, the stocks getting back to equilibrium. No great rallies, no, fresh highs. So the stocks are very, very oversold. Similarly, something like Hexaware, again, strong uptrend, strong monthly uptrend, just about corrected, and easily it could get back towards levels of 320.
Okay, well, those are a couple of calls coming in on the markets, but we need to take a short break on that note. When we come back, lots more lined up. We'll get another view coming in from Dipen Sheth in just a bit. Stay tuned.